Okay, so I want to share quickly, since he brought up velocity banking, and I want to share real quickly. Okay. So this is the first lien HELOC calculator. I am an official ambassador for this program because I believe in it. So the alternative strategy he's proposing is a good one, especially if you have a mortgage. And I want to address, again, numbers. He's saying this only works if the interest rate on your mortgage is higher than the interest rate on the line of credit. Because you see, Chris, if the line of credit has a lower interest rate, you'll pay less interest. Well, let's take a look at this example. Okay, mortgage versus HELOC. Okay, so you have a $305,000 mortgage at 2.6% amortized interest versus a home equity line of credit at 7.75% simple interest.
That's like 300% higher.
Most people would look at that and say, that's crazy. Why would I take out this home equity line of credit when the interest rate is like more than triple what this interest rate is? How can this possibly be better? Well, it's because this is simple interest, whereas this is amortized interest, and we're using this as our cash flow management tool. So in this example, this person has monthly net income of $12,000, monthly expenses of $5,000, not including your housing payment. Keep that in mind, right? Because we're replacing your mortgage with a HELOC, your mortgage payment goes away. So your monthly expenses we just removed probably your largest monthly expense.
Right.
So think about what that would do for your cash flow.
Yep.
Right. So here's what happens. And then we got homeowners insurance, property taxes. Here's what happens. The mortgage, of course, it takes you 30 years to pay it off. You end up paying $136,000 in interest. Interest you pay as a percentage of principal is 45%. But wait, I thought it was a 2.625% interest rate, Chris. Well, that's amortized interest. That's amortized interest. Okay. With a HELOC, charging 7.75%, we pay it off in 5 years. We save $1,200 in monthly cash flow. And we pay $63,000 in interest as opposed to $136,000. The equivalent 30-year amortized mortgage rate we're paying here would be 1.3%. So if we wanted to make an apples to apples comparison in terms of the interest rate on a mortgage versus the interest rate on this HELOC, it would be 1.3%, right?
And to that point, what I want to say is when you borrow against a whole life policy, the interest rate works the same way as a line of credit, right? Like it's simple interest. So you cannot just look at the rate and compare it to a mortgage rate or a car loan rate or anything. It's not apples to apples.
Yep. So, well, I don't want to go too deep into it because
no, it's amazing though. I think that's great.
It's a rabbit hole. But again, it gets back to your point. If we're going to compare numbers, we've got to be disciplined about understanding where those numbers came from, what are the assumptions behind them, so we truly have an apples to apples comparison, right? And usually what you find is these numbers people skip straight over the assumptions behind the numbers. And so their numbers may be internally consistent, but if you're myopically focused on what's the rate of return of my cash value only in the early years, you're looking at it, you're looking at it from the worst possible perspective. To whether you realize it or not, you're myopically focused on the one drawback to whole life insurance, which is, yes, there is a loss of liquidity in the early years. That is true. That is a drawback. I'm not denying it. Yep.
There are no free lunches. And there are no free lunches. He's right. And the expense is the early liquidity crunch that you have. Like, that's just it. That is the drawback. If you're willing to give a little liquidity up for the first several years for the benefit of all the long-term benefits that we talk about, like, question you have to ask yourself is it worth it? And I'm not here to sell anybody anything. It's like, if you think it's worth it, cool. If it's not, cool. Good luck. Go do something else.
So here we go. He's got another alternative for you.
Another one.
The second infinite banking alternative anyone can use. Infinite banking, as promoted by insurance agents, is designed as a big savings account you can borrow from. Your original money keeps earning even when borrowed out to you, while the borrowed funds are invested in other income-producing assets, the so-called double dip. Now that
which I showed.
Too bad. that isn't actually too bad. I would say borrow against rather than borrow from.
Yep. Yep.
But that's actually not too bad in terms of explaining it, how you could use it, right?
Yeah. But the bottom line, we showed that it does happen. That's like at year 20 when we showed whether you borrow against it or leave the money in there, it's going to be the same way. So it's growing all the while, no matter what.
Right. As we saw above, the insurance company is not the warm, fuzzy entity handing out free money. Your money is still growing because you are paying interest on the loan of your own money. No, we showed that's not the case. It grows regardless. We showed
And you're not paying the interest on the loan of your own money. You're leveraging your own money for collateral.
Right.
And the insurance company is giving you a loan. That's what it is.
And of course, he has to do the straw man. The insurance company is not the warm, fuzzy entity handing out free money. Well, who's claiming that? Like, whoever claimed that?
Like, all right, there are some agents out there that are trying to position it like that, and those agents should be fired. But like, you know,
but if you're gonna make a coherent argument, like, you can't just I could take any financial strategy and cherry pick some video on YouTube. Ridiculous things about it, and cherry pick some scummy. I could find some scummy realtor saying all sorts of ridiculous things.
Yeah, for sure. Yeah,
and then from that conclude that real estate is a terrible investment and it's a scam, right?
100%.
Like, that's ridiculous. Okay.
Yep.
If you're going to criticize a strategy, then you owe it to yourself and your audience to pick someone who acts as an authority figure on it, explains it well, and presents it in the best possible light, right?
Yep.
If you're going to be honest, as opposed to straw man. Okay. If you eliminate the insurance company and invest the same monies, you will have more because you don't have middlemen to pay. And the interest rate is probably higher, depending on current interest rates. With this in mind, Treasury Direct is an excellent tool for building wealth with your excess funds earmarked for savings and no state income taxes. By purchasing short-term T-bills directly from the U.S. Treasury, your money is always liquid. You can withdraw your money at any time. You can always call it borrowing out your own money if you want. No, withdrawing your money is not the same as borrowing against.
It is a completely different thing.
Yeah, when you withdraw your money, it's not earning for you anymore. Whereas when you collateralize your cash value and borrow against it, it's still earning for you. Big difference.
Completely different thing altogether.
Okay. The same concept works with money market accounts at financial institutions, banks, or credit unions. Wait a minute. I thought he said we need a bank. I thought he said we didn't need a bank in his strategy.
That's funny. Yeah.
Here we go again. Right?
And it doesn't work the same because as soon as you withdraw money from a money market account, you're no longer earning interest on that money. Period.
Right. And if the bank is paying you 4%, you better believe the bank is making more.
Yep.
So there are fees you are paying directly or indirectly.
Totally.
So yeah, you're buying a product. A money market account is a product from a bank.
Yep.
So I don't see that you've met your promise. And no, you don't keep all the money, right? If they're paying you 4%, they're making more. Therefore, they're keeping some of your money. That's how they make profits. They wouldn't give you the product if it wasn't profitable to them, okay?
Right.
There's nothing evil or nefarious about that. That's just how markets work, okay? I have no problem with people profiting from me, right?
Yep.
I don't envy them and feel like they stole money from me. They provided me a service, and I want that. I want them to be profitable, the businesses I'm working with. That way, they can keep offering me better and better products, right? It's a win-win scenario.
Yep.
It's not a win-lose scenario. This guy views every economic relationship as exploitative, and that is pure Marxism.
Yeah, everything's zero-sum win-lose to him. And it's not really the world we operate in.
Here is the magic of infinite banking. When you borrow your own money, you also pay yourself an interest rate. That is how the insurance company gets you to believe you are magically growing your wealth, even while money is out on call, borrowed.
You are not paying yourself an interest rate. Let's be real clear about that. You are paying the interest rate to the insurance company while simultaneously earning an interest rate on the money you collateralized. So let me just clarify that. Okay, go ahead.
Correct. Again, it's always a straw man argument, right?
Yeah, I know.
In a nutshell, this is the sinking. You pay interest as if it were a loan when you pull money from the fund. The infinite banking people want you to think this is only available from them, but it is such a simple concept, think Occam's razor. Anyone can do it, and insurance has nothing to do with it, structured or not. Okay, well, it is a simple concept. I agree, although it's hard. It doesn't make it easy to grasp. It is kind of challenging to grasp, but it is ultimately simple. And I will acknowledge that you could, in theory, use other vehicles. Like it has nothing necessarily to do with insurance.
Yeah.
Whole life insurance, I think, and you think, happens to be the ideal vehicle for doing this. Because again, it's about control. When you're using policy loans from your whole life insurance policy or against your whole life insurance policy, you have control over the borrowing
Yeah.
terms.
Yeah.
Other forms of borrowing may be great, like real estate investors borrow against their properties all the time. That can be phenomenal. I'm not saying it's a bad thing. I'm just saying
Right.
there's now a bank that's setting the terms of those loans, right?
Yep.
So once again, missing the intangible benefit of having control.
Yeah, for sure. And I think it's like anything else is like, I think the thing I love about the infinite banking concept is like you get to create a guaranteed result of what you want to happen. You can purchase. I always say you buy your net worth, you build your cash flow. So when you buy your net worth with the policy, you know that it's there forever because it's permanent life insurance. And no matter what happens, to me, that's freedom to gamify the rest of your life. That's freedom to say, hey, I know that I'm doing this because I'm married, I got 3 kids, and I have business partners, and I have a community of people that depend on me. So if something happens to me, what is my human life value? What do I want to create? And I say, all right, I could buy term insurance for 10 years and have it locked in place. But what if I get cancer 8 years from now, or 10 years from now, and I live through that 10-year term window? Now what am I going to do? I'm screwed. My whole plan, my whole goal for life is now thrown on its head. By doing whole life insurance, I have the ability to guarantee a specific result. I can buy that net worth. I can build my cash flow. And in doing so, now what I've done is I've gamified my life to an extent where now it's just like, I already know what the result's going to be. I've already won the game. How amazing is that? Now I can just go out and have fun and move to the Dominican Republic and buy a hotel and launch a private equity fund and do all these things. You know what I mean? And like, make money and help people get, returns on investment because of the fact, like, life should be fun. Like we should be able to bring other people up with us.
Right. He's myopically focused on the cash value. What you're pointing out, Chris, is let's look at year 1 in this policy. You just purchased a $2.9 million legacy. It's not life insurance. Yeah. So what you're pointing out is I just started a self-completing plan to save $2.9 million. No matter what happens to me, that result is guaranteed. This is why you cannot compare $2.9 million of term, which will never pay out in 98% of cases, versus $2.9 million of whole life, which is guaranteed to pay out. You didn't buy
at
life
a minimum.
Insurance.
Yeah. And it's going. And you can see as the death benefit goes up, or as the cash value goes up, the death benefit goes up because you always got that, effectively always have that 2.9 million there, which is great.
So you did not purchase life insurance. You purchased a death benefit. It's a guaranteed payout. It's a guaranteed result, right? So in infinite banking, we're looking at the death benefit too. The death benefit is absolutely part of the picture. You can't ignore it, right? People who don't understand infinite banking just get myopically focused on the cash value. They don't understand the cash value is the net present value of that future death benefit, okay? And so we started a self-completing plan to save $2.9 million, and that'll happen either while we're alive or after we're dead, or potentially when we have some health issues and we can start advancing ourselves that death benefit, right? So, yeah, okay. So I think we're almost done here. This is always painful to get through this stuff. It's always very painful. I'm kind of like,
Oh, it's done. Oh, at least he put a link to my video. That's nice of him.
What if I need life insurance? Well, you don't need life insurance. You don't need any financial product, in fact. Okay. All right. Some people looking at infinite banking realize they have a temporary need for life insurance. Term life is the perfect solution to a temporary need for protecting against the loss of a breadwinner. Wait, Chris, I thought he told us he wasn't going to sell us anything. It sounds like he's trying to sell me term life insurance. There are far fewer reasons for permanent life insurance. Key man insurance and as part of a buy-sell agreement come to mind as a possible good reason to purchase a permanent life insurance policy. In conclusion, there are no good reasons to engage infinite banking. It is a fancy term coined to sell high-priced life insurance with ample commissions to the agent and massive profits to the insurance company. So here we go again with the scarcity mindset. It's evil to make profits. It's evil for you to make a commission. Like when these insurance companies make money, they're stealing from you. It's evil.
Of
course, if you go to a bank and take out a line of credit like he's suggesting, or put your money in their money market funds, they're not making any profits.
Right.
No, that's just a charity.
I don't know how to say this like nicely. The only thing I can say is like my only concern with people like this is He's either like, I can understand how people first get exposed to it and they need to learn and they don't understand certain concepts or whatever. But if you're in the business to the point where you're writing a hit piece like this, my only feedback can be he's too simple-minded to understand it, and maybe it's just not for him, you know? Because if he doesn't get it, if the like, I don't understand how it's too complex, but like if he doesn't understand the difference between amortized you know, debt and simple interest debt, if he doesn't really get the difference between those, and he's going to write a thing where that's like one of the key pieces of the argument, if he doesn't understand the cost of capital, you know, and the value of that in different scenarios, and actually injecting that into the conversation and the equation he's using to do it all, if he's not doing that, he's just a hack. And I don't know why anybody would take this guy seriously. And it just shows he's got no real life experience. And my advice to anybody is don't listen to anybody with no real life experience.
Yeah, and I want to keep calling him out for his Marxist envy, right? Because they always, it says a lot about a person.
Yeah.
The names that they call you are always projection, right?
Yeah.
So notice how when they criticize infinite banking, they always have to jump to the scarcity mentality. They always have to jump to, well, you're just a greedy life insurance agent chasing after a commission. I'm like, okay, the fact that you accuse me of that before going into any argumentation says a lot more about you than it does about me. What it says is, I'm a parasite. I view everything as a win-lose proposition. And so I'm now going to project that onto you. So when you promote a financial strategy, I'm just going to assume you're just greedy, grubby, seeking after money. Me, on the other hand, if you have an alternate financial strategy, we can engage in a debate. And I'm happy, like, here's the other thing too. I always learn. When someone promotes an alternative financial strategy, even if I don't agree with it, I usually end up learning something, and I'm appreciative of that. And I do not assume this person has evil motives, because I think most people don't have evil motives. And I don't think it's evil to make money, right? Like, if you make profits, that is a good thing. It also tells me this guy doesn't understand how difficult it is to start a business, especially a business selling whole life insurance, right? Like, it's not money growing on trees. You don't see whole life insurance cackling madly and gleefully rubbing their gold coins together, right? I mean, you know, we have to contend with ridiculous arguments like this. So no, it's not evil to make money.
No,
it's a good thing to make money. The only way you make one of the things is by adding a lot of value.
Yeah, it's one of the reasons I love whole life insurance, is that like you're partnering with the life insurance company. So when you take a loan, whatever interest rate you're paying them is going to effectively help your own policy. You know that the interest rate is going to be relevant to the dividend that you're paying, or that to the dividend that you're earning. And so it's always fair. It's always equitable. It's always like there's always an alignment in value. And so like, to me, you're not going to find that relationship anywhere else in the financial world, you know. And
it says massive profits. It says massive profits to the insurance companies. Well, if you have participating whole life with a mutual company, guess who shares in the profits? You do.
You do.
That's where that dividend comes from. So if that insurance company massively profits, you do too. That's a good thing, right?
Yep.
It's a win-win scenario. And then it says high price. Notice he never quantifies this, of course. He can't quantify it. But you know what high price means? High value.
High value.
High value. That's what it means.
You do it right.
There's no free lunch. I agree with him. There's no free lunch. If you want high value, it's going to have a high price. Of course. Of course. If you want low value, go pay a low price. Get cheap term insurance, okay? With ample commissions. Once again, no quantification whatsoever. I'm sure he has no idea how commissions work. This is just a scarcity mindset, as always, right? Oh, those evil agents making commissions, right? No, how evil. Okay.
We're obviously just bad people, Logan. I don't know.
Of course. I mean, that's evidenced by the fact that you make money, right?
Yeah.
You can reach the same outcome as infinite banking with better results, more liquidity, no risk of a policy lapse triggering a massive tax problem, and more options if you use my alternatives. I get no commission for selling you a product. My bias is good information, so come back here and read more articles. Compare that to the biases the promoters of infinity banking receive. Here's the video from the promoter used in this article. Yeah, he says it wrong, of course. And notice, I love the title of the video is not, here's how infinite banking works, or infinite banking is the coolest thing since sliced bread.
Right.
No,
I
the
just tried to
title is
simplify it.
5 mistakes people make with infinite banking.
Yeah.
That's the title of the video. That doesn't sound to me like someone who is promoting infinite banking. That doesn't sound to me like a video that's intended to explain what the infinite banking concept is. It sounds more like a cautionary tale about infinite banking, right?
Yeah. Yeah. I mean, I'm a believer in properly leveraged whole life insurance. Like I agree that the infinite banking concept is I mean, it's a person who is an amazing guy who made a huge impact in the world by coming up with a marketing concept and philosophy and strategy to leverage a product that is like has been able to be used for 150 years, right? Like, so it's like the idea and the strategies are old, but like, you know, the community and the guy who, you know, God bless him, like took the time and dedicated his life to educating people about the power of this because of the impact it made in his life. That's, you're talking from the 70s that really happened. You know what I mean? So like, that's a small window of time as far as like this thing being marketed, quote unquote, versus, you know, how long people have been actually doing it, right? And so, like anything else, though, it's kind of like velocity banking. Like there's a strategy using a line of credit that's been around for a long time. People have been doing it for a long time, but it takes a person to come up with a way to market it and to get it out there to the world and like, you know, really start marketing it to people to implement it. And that helps people in different situations in life. And like you said earlier, in all situations, there's always going to be bad actors and people that misrepresent it. But I always kind of say, like, just because there are people with infinite banking that you got to be cautious of, people that are kind of giving half truths about things, people trying to tell you that you can use index universal life to do infinite banking, stuff of that nature. Yeah, you got to be cautious about these people and take time to really understand it. But you know, you got to be cautious about people like this guy too, like doing a hack job hit piece. And I hope whoever's watching this, I hope you share it with the guy, and I challenge him to a live debate, you know, talking about it. Like, Logan and I would love to do a conversation with him on this, on a live forum, talking about his strategies versus ours and the good, the bad, the ugly on all of them. I believe, and I know Logan does too, in 100% transparency and 100% education. You should never put your money into anything you don't understand, period, including whole life insurance. You know,
Right.
I'm probably the worst salesperson in the world in that sense, because like I talk more people out of whole life insurance and into convertible term policies because they're not ready for whole life insurance yet. They just need to get their death benefit in place. But the goal is to convert it to a whole life policy, because from a long-term perspective, that's going to guarantee the result. And that's the question, is what problem are we trying to solve?
Yep. And I'm sorry, but I just have to hammer this again.
Yep.
Notice how he says, I get no commission for selling you a product. So once again,
Yep.
this is the scarcity mindset. This is Marxism. It's evil to make money. Okay. My bias is good information. So again, he's completely unbiased. The only thing he's trying to do is give you good information, Chris. Right?
Yep.
Okay. Well,
Nothing
obviously
to sell you.
we're all biased. Okay. Let's just be honest about it. We all biased. Well, now he says he's not selling you anything. Now let me scroll up. This is his website. Look at that. Chris, I think this is an advertisement here on his website.
Oh, he's selling
I think
something.
if I click on that, he's
an
probably going to
accountant.
make some money.
He's trying to sell you his services. So
Interesting. And also, look, you can sign up for his email list, Chris. If you
he's
do
not running
that,
a business, is he?
I bet he could make money off of you that way.
Oh,
Right? But wait,
yeah.
I thought he was Mother Teresa. I thought
Yeah.
he's just here, and you know.
Well, you know what? And the ironic part about that is, Logan, and I don't know how long you've been following my channel, but like from 2016 to 2023, I didn't have a license. I couldn't sell anybody anything. All the content that I made from 2016 to 2023 was basically just me sharing what I believe, because we do these strategies ourselves, and you know, like, it is what it is. And before
You mean
2016,
you weren't a greedy life insurance agent just hunting a commission?
before 2016, I was licensed. And because of a lawsuit and because of a non-disclosure agreement, I had to give up my license if I wanted to keep talking and exposing some of the truths about the industry I wanted to. So I gave up my license to just be able to share the information. And that's what inspired me to originally create the YouTube channel, is sharing that information. I couldn't sell for 6 years, and everything I did was just about giving information in a genuine, pure way. Now, I'm not shy to say I sell life insurance now, and because I believe in it. You know, I got my license again, the statute of limitations ended on my whole deal, and, you know, it is what it is. But, you know, money follows value. And I think the thing that I love about life insurance is the money that I make is directly correlated to the value and impact that I made in people's lives, because we do it the right way. And I can't think of another area that allows us to be able to make that statement as boldly and as strongly as we do here. So that's why I love
Absolutely. Absolutely. The more money you make, the more value you provide. It's exactly the opposite of what this guy is saying. So, wow, I can go on forever. Chris, do you have anything you want to leave our audience with in closing?
No, I mean, I think that's, I think I just go back to and reiterate what I said before. Never put your money into anything you don't understand. That includes this, but work with somebody, whether it's Logan or my team or somebody else like that. Like, make sure you work with somebody that really is willing to take you down an educational journey, ask critical questions, work through it in your life, see what it would look like, get really comfortable with all the different scenarios. Realize that it's not just a product that's going to solve your problems. It's how you behave with the product. It's how you act, and it's who you become in the process to actually accomplish the goals that you want to accomplish. And it's a journey. There's no financial product that's going to solve all your problems. Unless you die, then this is a great one, but please don't die.
Excellent. Excellent. Well, Chris, thank you so much for your time. We really appreciate it. I hope we can do a lot more of these. This was fun, and we'll see if this guy's up for a debate. We'll see if that happens.
Do it.
All right. God bless everyone. Bye-bye.